Imagine you discover a massive, magical tree. Its branches are heavy with glowing golden apples. You reach up, grab a branch, and start to climb. As you pull yourself up to the first sturdy branch, you pluck a few apples and tuck them under your arm. It feels fantastic. You're doing it. But this tree has one very strict rule. The apples you're holding in your hands right now, they don't actually belong to you yet. The higher you go, the more exposed you are. A sudden gust of wind can violently shake the branches, sending every apple tumbling away. To actually claim your prize, you have to do something very specific. You must carry those apples safely all the way back down to the ground. Going up is only the first half of the trip. Stepping your boots back onto the solid earth with your harvest intact is the entire point of the climb. This tree is exactly how financial trading works. When you buy a stock or a cryptocurrency and watch the price tick higher on your screen, you are climbing the tree. We call that positive number on your screen paper money or an unrealized gain. It looks great, but it is not actual cash sitting in your bank account. The market can turn against you at any second, just like that sudden gust of wind. Prices drop, and those numbers on your screen vanish before you can react. To turn that paper money into real money you can spend, you have to hit the sell button. In trading, we call this taking profit. Hitting that sell button is incredibly difficult to do in the moment. When you're up in the branches, human nature kicks in. You see more apples just a few feet away, and you naturally want them. Professional traders know this urge is coming. To protect themselves from their own emotions, they map out exactly how they will leave the tree before their feet ever leave the ground. The simplest approach is the fixed target. Imagine deciding, I am going to climb to the third branch, pick exactly 5 apples, and immediately climb down. On a chart, this means buying an asset at $10 and setting an automatic instruction to sell the moment it hits exactly $15. You never have to think or guess in the heat of the moment. The system executes your plan, and you walk away with a guaranteed win. But what if the tree goes incredibly high? You might want to keep climbing, but you are terrified of dropping everything you've already collected. That brings us to our second strategy, scaling out. Imagine grabbing a few apples and tossing them down into a secure basket. In the market, scaling out means selling half your shares early to lock in cash, letting the rest ride the momentum higher. If the price suddenly crashes, your early sale protects you from a total loss. But if the price keeps soaring, you still have skin in the game to reap the rewards. Finally, we have the trailing stop. Think of this as a magical safety net that floats up right behind you as you climb. As you reach higher branches, the net rises too. If the wind blows and you slip, you only fall a few feet into the net, safely exiting the tree with your apples intact. In your trading account, a trailing stop is an automatic rule that follows the price upward. If the price drops a specific distance from its highest peak, the system immediately sells your position. It mechanically locks in your accumulated profit while giving the asset unlimited room to continue growing as long as the trend stays positive. Buying an asset is actually the easiest part of trading. Having the discipline to know when to sell is the true challenge. This is a historical chart showing an extended market trend, and you can see our apple tree climb mapped right over it. The price steadily ascends from the bottom left all the way to its peak. The people who make a career out of this don't worry about perfectly timing the absolute highest point. They focus entirely on making sure they safely carry their gains back down to the ground. So before you ever buy your next stock or token, remember the rule. Never enter a trade without knowing exactly how and when you plan to exit.